Today, we're breaking down UFO, the Procure Space ETF, one of the most well-known ETFs focused on the global space economy. UFO is designed to give investors targeted exposure to aerospace and space-related companies around the world, spanning everything from satellites and rockets to space-based data and intelligence services. UFO tracks a tier-weighted index of global aerospace companies, making it different from traditional defense or industrial ETFs. This fund is often described as the first global aerospace and defense ETF, but its emphasis goes beyond legacy defense contractors and into the commercial and technological side of space. The companies included in UFO operate across several segments of the space ecosystem. These include satellite-based consumer products and services, rocket and satellite manufacturing and deployment, space technology hardware, ground equipment manufacturing, and space-based imagery and intelligence services. Rather than focusing on a single niche, UFO aims to capture the full value chain of the space industry. What makes UFO's index construction unique is its two-tranche structure. The index divides companies into non-diversified and diversified space businesses, and then weights those groups differently based on how central space is to their operations. The first tranche consists of non-diversified companies that derive at least 50% of their revenue, and often close to 100%, from space-related activities. These are the pure-play space companies whose business models are directly tied to satellites, launch systems, or space-based services. This tranche receives 80% of the index weight, making it the primary driver of performance. The second tranche includes diversified companies that play a significant role in space technology and equipment, but have broader business lines outside of space. These firms may be large aerospace or defense companies where space is an important, but not exclusive part of their operations. This tranche receives the remaining 20% of the index weight, providing stability and scale while keeping the fund focused on space. This tiered approach allows UFO to balance thematic purity with diversification. The heavy weighting toward pure-play companies increases sensitivity to growth in the space economy, while the diversified tranche helps anchor the portfolio with larger, more established firms. UFO is a global ETF, meaning it can include companies based in the United States, Europe, and other regions actively investing in space infrastructure and technology. This global exposure reflects the reality that space is not a single-country industry, but a worldwide race involving governments, private companies, and commercial partnerships. The index is reconstituted and rebalanced semi-annually, allowing the portfolio to adjust as new companies emerge, revenue mixes change, and leadership within the space industry evolves. However, this is still a thematic ETF, and holdings can be volatile between rebalances. From a risk standpoint, UFO is not a defensive fund. Space-focused companies are often capital-intensive, sensitive to government budgets, and dependent on long-term contracts or technological breakthroughs. Performance can be cyclical and tied to investor sentiment toward innovation, defense spending, and global geopolitics. Because of this, UFO is best viewed as a satellite allocation, not a core holding. It may appeal to investors who believe in the long-term growth of the space economy, including satellite communications, Earth observation, defense systems, and commercial space activity, and who are comfortable with volatility along the way. Bottom line is this: UFO provides targeted global exposure to the space and aerospace ecosystem, with a weighting structure that prioritizes pure-play space companies while still including diversified industry leaders. For investors looking to express a long-term thematic view on the commercialization and expansion of space, UFO is one of the most established ETFs in the category. If you found this breakdown helpful, make sure to like the video, subscribe to the ETF Investor, and comment below. Do you see space investing as a long-term growth opportunity, or is it too speculative for your portfolio?